Hello, everyone. Welcome to FXAQ. I have an old and dear friend, Alex Chaia, with me today. Alex has written a number of books on the financial markets. I have one here in front of me, Currencies and Cryptocurrencies, that was written back in 2018. I still refer to today. But the book I want to talk to Alex about is the Introduction to the CFST Master Exam. Alex, welcome. Glad you could come on.
Thank you, Fred. Very nice to be here. Nice to speak to you again.
Thank you. For everybody in the FXAQ universe, Alex wrote a book called Systematic Trading, the official guide to the CFST exam. And what I've found is the book to be very helpful when looking through all the different chapters. And what I'd like to do with Alex today is just have a little overview of it. And Alex has been kind enough for the FXAQ, for the learning process of what we're trying to do, for people learning how to trade and to grow into the financial markets, is to allow them use of this textbook while they take the CFST exam. And FXAQ is going to be able to give that away for free for qualified clients who choose the proper challenges to get that forward. And the CFST exam really is a great overview, give you a well-rounded view of the markets. You'll understand everything from derivatives and bonds and futures and everything. So, Alex, thanks again for coming on. And just a little bit about your background. I know you're still an active trader. You're still running your own Catalyst Futures. You're the managing partner at Catalyst Futures. Is that correct?
Absolutely. So, Catalyst Futures, the company behind this book is risk management, risk consulting company for hedge funds, institutional investors to manage their derivatives portfolio and perform risk optimization. So, the idea behind the CFST is to raise the bar in professionalism in the derivatives industry, whether it is about the over the counter, spot FX trading, or futures or options trading on exchange. What the CFST exam does is to certify traders to be professionally able to join the industry. So they will learn about compliance, they will learn about exchange regulations, they will learn about contract specifications, macroeconomics around the derivatives trading world. So the idea of the CFST is really not just for anyone interested in trading, but for people who are interested in becoming professionals in the trading industry.
I just want to add to that. As I said, and originally, I found the book to be very useful. All of the junior people I've met that have come up through the ranks through seminars that I've given, I've handed out the e-copy of this book, and they've really enjoyed it, and they found it to be very helpful, very useful. And now we have the ability to partner with the CFST exam and really make someone proficient in the financial markets and learn whether you want to have a career in trading, whether you want to have a career in compliance, or you just want a well-rounded education. This is the tool you need, absolutely. And what
Absolutely,
Alex
and
has
it's a nice
agreed to do.
consulting book as well. It's a nice place to have as a reference when you need some information about futures and options or spot effects. Is all very nicely organized, so you can quickly remember the information. So
That's right. And the purpose of our session here today is I just want to do a quick overview of each of this. What is it about? It's seven, six, 7 chapters that we talk about here. 7 chapters in the book. And, just to go through them very briefly, just talk about overview about what they are,
okay,
and then Alex is. I think you're okay. We've spoken in the past. Alex has agreed to do a video on each of the chapters where we could take a much more in-depth look at each of these chapters. And for people taking the FXAQ, prop challenge and taking the proper tests that are going to take the CFST test, they'll be able to use these video lessons to really dive into each chapter and learn more about it and help them along their path.
My pleasure.
That's great. And so let's start off. I'm looking at chapter one. You go through and you talk about the structure of the exam, preparing for the exam,
It's very
who
simple.
should take the exam.
Chapter 1, introduction, is about the exam structure, how to take the exam, so it explains the process of doing it. So the exam is actually divided into two, level 1 and level 2. Level 1 covers mostly compliance and the basics about derivatives trading, whereas the level 2 also includes algorithmic development, includes more about the specifications of futures and options, contracts and options strategies. So you can do them separately. You don't need to do it at the same time. It doesn't matter how much time has passed between your level 1 and your level 2 certification. And it also explains how it happens. So the tests are applied by a multinational company called Prometric, which I think they are available in 200 countries with test centers, much like when you go do your driver's test that you sit in a computer. You need to check your pockets if you have something. So they have a very rigorous way of certifying people.
I was speaking to someone the other day who was regulated by FINRA in the
Yeah,
U.S. and Prometrics provides the exams for FINRA.
that's right. That's right. It's the same
Yeah.
company that applies for FINRA
So
and
they
many
are
other.
very well regarded,
Relevant.
very well respected, very well regulated. Yeah.
Yeah, very much to make sure that you are being tested. They have a proctor delivery as well of the exam. So basically, you can do from your home if for whatever reason you have to. But of course, then you can't look away from your camera. There will be someone observing you, like what's going on, and there's a number of requirements that they help you to go through.
Hmm.
Yeah, and then chapter 1 explains the basics. How do you schedule your exam in the Prometric website? And when do you receive your grades? Your grades come immediately to you after you finish. So you will see a report of your score. So each level is 40 questions. The questions are all multiple choice. You need 28 correct answers in each level, or 70% to pass.
Right.
You can take the test as many times as you want. There's no education prerequisites. You doesn't matter if you went to university or not. You can take the exam. It's a professional certification. That's what it is.
It's like the CFA light, I guess you would say, right? It's a well-rounded financial markets education.
It's much more focused, I feel, because the CFA has covers a lot of the equities and investment banking world. So they cover debt financing. They call equity valuation. Valuation of public companies. So this has nothing to do with equities here. So this is purely derivatives. So we focus on futures. We focus on options on futures and on OTC spot FX and forwards. So it's really niche to the derivatives trading world, which happens to be also the most accessible market for retail
Absolutely.
traders as well. So
Absolutely.
yeah,
Well, that was a great overview of chapter one, and chapter two really starts the nuts and bolts of where you learn, where you really
yes,
build your benefits. The idea of professional conducts, ethics, and U.S. derivatives regulations, European derivative regulations.
that's right. So chapter 2 depends on who you are, but I find it probably the most painful one. So, because it goes to the nitty gritty of the regulation of different markets for derivatives. So you start with professional conduct and ethics, which we all must abide as professionals. But then the U.S. derivatives regulation, how the NFA works, how CFTC works. But also we go, because the market is global and the exam is global, it's not just for one market. It covers EURIX, which is the German derivatives exchange, the European derivatives exchange, LME in London, Brazil, India, Dubai, Singapore exchanges,
And there'll
and
be
all
questions
differences.
from
Yeah.
this chapter on the test as well. Is it proportionate? So if there's seven chapters, each of them gets about 12% of the questions or so.
Yeah, pretty much. And
So you got to do your homework.
throughout the book, you have some example questions at the end of each chapter, so you know if you are prepared or not right away.
Right. That's good. So, it really gives you, and, my background is US and European, but I know there is so much more interest now in Latin America, what Brazil is bringing to the table, and in India, what Bombay is bringing to the table, the Dubai Gold and Commodities Exchange. So it really is a great tool in order to build up your knowledge base on those areas and what's required and what's needed.
Probably the next step for us is including China. China is a market we didn't include here because it's closed. It's a closed market for international. Still was. They are opening more and more. But you have the Indian derivatives market, which is the most traded one in the world in terms of volume of
That's
lots.
true.
Yeah.
Yeah.
So
Fascinating. And that's relatively closed market as well, India. Tough to get
it's
money out of the country.
complicated. It's complicated, and this is covered here. How you get access as well. You know, like that you need a local custodian, a legal representative. So there's a lot of bureaucracy involved for sure. Yeah.
But if you want to trade those markets, we explain how to do it.
Exactly.
And then chapter three is another one where you really get into some of the interesting stuff, the types of markets, types of traders, types of contracts. And you talk
Exactly.
about central banks as well. That's interesting. History of
Yes.
central
Chapter
banks.
3 is called Market Fundamentals, and that's what it is. It's about the structure of the derivatives market. So, who are the players? Who is there? Who are people that do arbitrage? Who are speculators? Who are liquidity providers, takers, and so on? So, this is explained there. And then you go to economics and the pricing of derivatives, because how do you come up with that price? Is it just a market defined thing, or is there an equation behind, right? So this is discussed like the Phillips curve, which is discussed inflation, employment, bonds and interest rates, currency and monetary base. So most of what defines, especially financial futures, you learn the basic of the economics behind derivatives. So that's the idea of chapter 3.
That's and I think for anyone that's looking to get into a day trader type mode, you want to know who's moving those markets. You want to know the players and how they all developed. Everyone talks about the bond market's up, the yield curve. You get into that here. Um, Talk about the market efficiency of the foreign exchange market, the purchasing power, purchasing power parity theory, and central banks.
Yeah,
We always talk about what is the European Central Bank doing, what is the Japanese Central Bank doing, what is the Fed doing, and you explain the origins of all of that there, how they've developed, and what their impacts are, and that's just for the layman, just to learn more about it. We get questions every day about the central banks, the Fed, the European Central
yeah.
Bank.
So market fundamentals, and that's it. It's about getting the fundamental idea of the relationship between the economic variables and how this will affect the derivatives. So interest rate go up, what happened to currencies? What happened to equity indices? So this explain like what are the theory, because there is a lot of theory around it as well, which in economics you can't prove a theory, right? There's no experiment that you can do
Right.
with society, right? So there are some theories around it, and those theories, the main ones are explained there. The exchange rate determination models in
Right.
specific.
And, and then we get to chapter 4. And chapter 4 is interesting as well. This is my world: spot contracts, forward contracts, futures contracts,
Yes.
futures and options, margin models, how to use what margin and leverage is, pips and pip values, and cross rates. That's everything you really need. Chapter 4 is the backbone if you wanted to be an FX day trader, if you wanted to open up an FX trading account. And that's
I
why I think
agree.
what we're trying to offer at FXAQ is really different from what prop firms are offering. Because FXAQ and other prop firms will give you a trading account and a
And
portal
good
a
luck.
portal. Yeah, a trading account, a portal, some live rates, and go blow yourself up. Whereas what we're trying to offer here is the prop account really is your way to validate what you've learned in these markets. You know, you look at different things, you go through the book, you go through the test, you get certified, and then you have your prop account, and then you start to trade and you start to play around and you
That's
meet
right.
those hurdles, and then you prove to yourself that, I can compete. I've learned what the big boys know, and I know I can do this now. So,
Exactly. So I totally agree with you there. Chapter 4, it's about pricing and risk and about the specifications of the many derivatives contracts. This is a chapter that any trader must master
yes.
because if you don't understand the basics of how the contract moves or how to calculate the margin and how much money you need to trade one contract, and you're not going very far on it, right?
And
So,
we're talking about funding
yeah,
rates and rollovers and what they mean.
exactly, exactly.
I hear people say, well, I'm going to buy a certain currency, a high interest rate currency, and I'm going to earn, 5% because I'm going to buy this country, this currency that yields 10%, but I'm going to sell the one that yields 5%, and I'm going to have a positive carry of 5%. That's
Yeah,
great. But if the underlying currency moves 10% the first day, you're not going to earn that reward. That's a 1 year per annum. So it's
yeah.
good to.
Not to mention, and this is also touched base here, is like usually the brokerage firms or liquidity providers, they do markup on this rollover fees.
Right.
So because there is a carry, usually you lose value on your position to have that carry. And because they mark up those rollover fees, you don't get the full carry either to compensate for it.
Right.
So yeah, yeah, that's why you need to know.
So there's not only a bid offer spread on the
Yeah,
price that you're buying or selling, there's a bid offer spread on what you're borrowing or lending to fund that position every day. Yeah, I remember when I first started in the markets, I would say late 1970s, early 1980s, and I was learning forward foreign exchange, over the counter forward foreign exchange. And what the textbook definition was the PIP, the percent, it was the interest differential expressed in a PIP value plus or minus spot over
right.
the course of a year.
Yeah.
So you look at it and, and I remember, the way we used to do forwards way back is people would deal, 1 month, 2 month, 3 months, some futures dates, the September contract, the December contract, right? And I had one car company that we dealt with quite often, very big. Everyone knows their name. Um, and you would deal the spot price for him in Deutschmarks at the time, and he would sell at let's say the price was 173, and then he would come back and say, how many days can I get for 300 points? He wanted an outright price of 1.7 instead of 1.73. So not what's the price for 3 months or what's the price for 2 months. How many days can I get for 300 points? It was a very different way of looking at the forward valuations. I always found it fascinating.
Yeah, and those calculations are explained as well. How do you calculate the basis, risk, forward contracts, and not only on FX but on commodities as well, which it's a very similar element but different about the convenience yield, which is cost of storage and insurance.
Right.
These all
The
within
ideas
that
of
basis.
contango and what's the other term?
Tango, backwardation.
Backwardation, right?
This is all very well explained here, and you're going to learn in chapter 4. So
Right.
chapter 4 is the big friend for FXAQ traders, that's for sure.
Absolutely. Absolutely. And then we get into another area that I love, options pricing and risk. There's so much that you can learn. The world is that everything is an option. Everything is an option.
But there are many, even to value a company, there is a method that you approach by valuing its options first, you know.
Yeah. And in chapter 5, you talk about the price components, expiration, theoretical models, the idea of
Theoretical models,
volatility.
not all of them, of course, but the basics of it, because this is an introduction after all.
Mhm.
Volatility and how volatility is important to price the different strikes. Go to the Greeks, the famous components of the Black-Scholes-Merton model. So explain which one, how to interpret them, what do they mean, and some examples of spreads, or also called option strategies like straddles, triangles, butterflies. So all these examples with futures underlying. So it's options on futures, which is the main target of this book is about the derivatives world in general as an underlying as well. So you
Mhm.
get like S&P 500 futures options. How how do you make a butterfly out of it? You know?
Right.
Yeah.
The old term that we used to do, and I guess there's new terminologies for it now. What I would do is create the synthetic spot, buy the low delta call, sell the low delta put, and you create a spot position, right? The put call is put call parity. A 50 delta put is the same as a 50 delta call in terms of hedging, not in terms of your underlying risk. So if you buy a 30 delta call and sell a 30 delta put, you're in a sense putting on 60% of the face value of that underlying. It's an easy way to express it, but there's risk. There's certainly risk.
It's
Uh,
everything.
a lot of people use it, as you say, in the futures market, but I've seen it used very extensively in the equity market.
Cash equity.
You don't want to buy the stock specifically and use up all of that margin. So what I call a risk reversal, but there are different terms now, butterflies, and you buy the upside strike, you sell the downside strike, and essentially you're long until
Yeah,
expiration.
and it's interesting you touch a point about risk because options are usually by someone who doesn't understand options, the immediate reaction like, oh, this is really risky, right? And of course, this can be really risky, but it can be also used as a tool to manage your risks. That's why they exist, right? They exist as a type of insurance contract that you can buy against positions or when it started. Well, the one of the first books about option, I don't know if you knew this, but was just before the tulip bubble in the Netherlands, and it was a Spanish trader called I think De La Vega or Vega,
Okay.
and then it was the title was Confusión de Confusiones, which means confusion of confusions, and that's the first the guy write about options, strategies, and it's a very interesting and fun thing to read. Actually, if somebody is interested, I have a copy.
Yeah, and there are people that, I took a seminar one time from one of the major options specialists on the CME and the Board of Trade, O'Connor Partners, way back when. And he starts by saying anybody can make money in options. It's very simple. He said, but the real money is made managing the risk and hedging the option. You could buy an option, put it in your drawer and forget about it until expiration, and either you made money or you lost money. Either it expired in the money or out of the money. Um, but the real money is made trading that delta, trading the vega, buying long delta options, and then trading around that and hedging properly. That's where that's when it becomes an art. And
Absolutely.
I think this chapter 5 explains the art, the idea of a delta. You talk to an options trader and you say, what are the chances that Tiger Woods going to win another major? Oh, that's a 20 delta. It's a low probability.
Yeah.
Options traders will talk to you in terms of delta.
Yeah.
Well, that's great. I mean, this is another fascinating chapter that I think everyone's going to get a lot of input from, and I can't wait to discuss that with people going forward. And then we
Nice.
get to chapter 6, and
Chapter 6, data analysis and
yeah,
stochastic methods. So this is again very basic. I don't want people to be scared about too much theory in this book. It is a short book. It's not very thick.
right,
300 pages, about
right,
250. And chapter 6 is a bit of data analysis, of data science, but the very, very basic stuff like regressions, what is a cross-sectional data, what is time series, um, what is Gaussian assumptions, normal curve, really the basic. So in the certification, what we want from the professionals is that they understand. Like you said, we were just talking about probability, the 20 delta,
hmm,
which effectively means 20% probability on what? On the normal curve, right?
right,
On the Gaussian curve. So this chapter 6 complements it by making sure that you understand the basics of data science.
right. Yeah, that's I've gone through it a few times. I have to go through it a few more. I'm the old roll up your sleeves spot trader from way back when, so this is all a fascinating new world. And really, it's where trading is gone. That's why I'm no longer a spot trader because people that have mined data and have built these algorithmic trading strategies have put the old time spot trader, the desk trader out. We used to make markets and we manage liquidity by doing that. And now the machines all do it because they are so programmed, so well programmed. And if you're an FXAQ user, gone through this chapter, studied it well, there is a lot more that you can learn and build your own models from it.
Absolutely.
Yeah. And then we get to chapter 7,
The
which
last
is
one,
yeah,
yes, the very last one is about algorithmic trading systems. And as well, there's not much about programming at all. It's not that you have to program an algorithm, but it will guide you and you will learn through this chapter where to start. And one of the topics, for example, how to design your algorithm. And it's really like building the flow chart of what the algorithm needs to do. So you build a house, you need to make a plan, and it's the same thing. You want to build a trading algorithm, you need to design a plan,
hmm,
and then uh, some concepts of object-oriented programming are discussed. So basics about programming, the differences of building an algo in Python or C++, what are the benefits and disadvantages, And we touch as well on the fixed protocol, which is still, especially in the spot FX industry, most used protocol of exchanging trading messages between broker and client or exchange venue and client. So it's explained how these messages are structured, what you need to know about them,
What each tag represents. Yeah.
all like an overview, superficial. You're not going to become a professional programmer by reading this chapter, absolutely not. But you're just learning enough so that you pass the exam and that you know how to dive deeper into it if you want to. That
You can
that's
carry on a conversation with someone and you could start to learn what you don't know.
and that's all what this book is about. So it will cover the basics of everything trading related of derivatives. And if you're interested in deep diving into something, you can do it and you will understand, where do I start? What do I learn first? I want to build my system. How do I do? Should I just start coding? No, no, no. You should first build a flow chart, which very little, not many people do it, but you absolutely have to. Otherwise, you will get lost.
Right.
So yeah,
That's fascinating. I mean, those last few chapters I think are very important for anyone looking to build a career in, or just to learn more about the markets. This is where we're going. Everything is going electronic. So I think electronic trading is, the idea of over-the-counter trading has disappeared. It's disappeared in the futures pits. It's disappeared in the equity markets. Everything has gone electric and electronic. And now it's up to the individuals to build into that.
100%.
Yeah. Well, Alex, thank you very much. I mean, I'm in awe of what you've done and how you've built this all together, and still maintain a successful hedge fund and manage that risk day to day. It's fascinating to me, and I think everybody else that's watching this. So I'm going to grab you for a little bit more time as we go forward and dig a little deeper into each chapter. But we've done about 30, 35 minutes so far to give a really strong overview of what the book is, what the test is, what Prometrics offers, the CFST exam,
Yeah,
what you
absolutely.
become.
And the partnership with FXAQ as well. So anyone interested in being certified, this is an incredible path where FXAQ you get your proprietary trading account. So what you're actually paying for is for the education, for the training for the CFST, and on top of it, you might be managing some money already from day one, without the usual risks involved in having a brokerage account.
Yeah, the
So
benefits of prop trading is certainly we've seen more and more people try to get involved in prop trading as opposed to risking their own money from day one. They create their mistakes at the prop level and then ultimately get funded and build their success going forward.
yes, except that here they are paying for the education, right,
Yeah,
Fred? So I
yeah,
think that's
yeah. Rather
that's
than just paying
incredible.
for the opportunity to lose money, right?
Exactly.
Here you're paying for education, the opportunity to learn and make
Exactly.
money. That's right. Well, thanks again. We'll reach out again shortly, I guess, in the next few weeks, and dig a little deeper into each chapter. Once again, Alex Chaia, Catalyst Futures, managing partner, author, all around great guy, somebody that we always want to be close to. So thanks again, Alex. I look
Thank you,
forward
Fred.
to the next session.
Absolutely.
Cheers.
Cheers.